The dream of getting rich with crypto is still everywhere. But if you look honestly at how the market works today, there is one uncomfortable truth. The era where you could randomly buy an altcoin and become a millionaire is mostly over. Bitcoin has now existed for more than 17 years. It launched in 2009 as a small experiment in digital money. Today, it has become the largest cryptocurrency in the world and one of the most discussed financial assets on the planet. But something else has happened during that time. The crypto market exploded in size. Today, there are tens of thousands of cryptocurrencies, and most of them will not survive. Research from CoinGecko shows that more than half of all cryptocurrencies ever created have already failed or disappeared. That means the majority of projects eventually die. Some were scams, some were hype, and many simply had no real use case. But here is where most investors make their biggest mistake. They chase altcoins, new tokens, new narratives, new meme coins, and the logic seems simple. People think, if Bitcoin already went up so much, the next big altcoin must be the opportunity. But in reality, this strategy rarely works for retail investors. Research from the Bank for International Settlements found that many retail crypto investors actually lose money, especially when they enter during hype cycles. In simple terms, most people buy when prices are already high, and they sell when the market crashes. Another problem is that altcoins are extremely dependent on Bitcoin. Studies show that Bitcoin usually moves first, and altcoins follow later, but they follow in a very specific way. When Bitcoin rises, altcoins might rise. But when Bitcoin falls, altcoins often fall much harder. And if you look at the historical data, something interesting appears. Many altcoins have actually underperformed Bitcoin over the long term, even during multiple market cycles. This happens because Bitcoin has a unique position in the crypto ecosystem. Bitcoin is increasingly seen as digital gold. Institutions buy Bitcoin. Spot ETFs buy Bitcoin. Large funds buy Bitcoin. And when the market becomes uncertain, investors often move their capital back into Bitcoin. This is known as Bitcoin dominance. When Bitcoin dominance rises, altcoins usually struggle. So what does this mean for someone entering the market today? The strategy of buying random altcoins and hoping for a 100x return is essentially gambling. In fact, the odds might be closer to a casino, because the people who actually make huge profits in new altcoins are often early insiders, venture capital funds, or developers involved in the project. They enter the market long before the public even hears about the token. By the time retail investors discover it on social media, a lot of the upside is already gone. But there is another mistake investors make. Even when they are in profit, they don't take profits. Their portfolio goes up 5x, 10x, maybe even more. But greed takes over. They believe the price will keep going higher, and then the next bear market arrives. And those paper profits disappear. This cycle has repeated itself over and over in crypto history. So what strategy has historically worked the best? For many long-term investors, the answer is surprisingly simple. Bitcoin. Buying Bitcoin. Holding Bitcoin. And if you want to take on a bit more risk, you could consider looking at the top 5 or top 10 cryptocurrencies by market cap, but excluding stablecoins. Because the further you go down the market cap rankings, the higher the probability that the project eventually disappears. Crypto can still create massive wealth. But the market has matured. And in mature markets, wealth is usually not created by chasing hype, but by discipline, patience, and strategy.